All right, good afternoon, everybody. Thank you for joining us for this session today. My name is Thomas Barr with Local First Arizona, and we wanted to put together this just kind of informal but informative session regarding the employee retention credits that small businesses can access. We've been having lots of conversations with businesses that may have heard of it but haven't really pursued it or aren't sure how to. And so wanted to introduce a couple of great partners of Local First today to kind of walk through what they know and answer any questions that you might have about accessing these funds. Both Stephen Harris from Journey Payroll and Kevin Marshall from Profitopia are going to lead you through just a short presentation to give an overview regarding the employee retention credit, and then want to make sure that you have the opportunity to ask questions. So there should be the function that you have, I believe it's on the bottom of your screen. There's a Q&A box. At any time, go ahead and post questions there, and I'll receive them and be able to send them over to Stephen and Kevin to cover for you. So again, anytime, drop in those questions, and I'm going to go ahead and give it over to you, Stephen and Kevin. Thanks so much.
Thank you.
Thank you. Awesome. Thank you, Thomas. So as Thomas mentioned, we're here to talk about the employee retention credit. I'm one of the owners of Journey Payroll and HR, our Phoenix location, and Kevin Marshall is the president and CEO of Profitopia, which is a firm that specializes in these types of tax credits. So given that it kind of goes hand in hand with payroll and tax credits, we thought we really appreciate you, Thomas, and Local First for giving us the opportunity to give a lot of businesses an overview of what's going on. As we're finding, about 90 to 95% of our clients had no idea what it was or how it worked, prior to us reaching out and letting them know. There's been a lot of changes over the last 12 months and a lot of things that have been put in place to help those small businesses through the COVID-19 pandemic. So thanks again for the opportunity, and we'll go ahead and jump right in. So first, what is the ERC? The Employee Retention Credit was originally enacted through the CARES Act. If you remember, that's when the Paycheck Protection Program was built, the Employee Retention Credit, and many other programs a little over a year ago. And originally, you could only choose one or the other as a small business employer, the Paycheck Protection Program or the Employee Retention Credit. So the Paycheck Protection Program obviously was wildly successful and a lot of businesses getting funds. So the ERC was kind of a forgotten tax credit, or not as widely used. However, at the end of last year, right at the end of the year in December, this Employee Retention Credit was amended to extend it through 2021, Q1 and Q2, as well as removing the stipulation that if you got the PPP funds, you would no longer be eligible. So now those that receive the Paycheck Protection Funds are eligible for the ERC. And then through the American Rescue Plan, it was also extended through the end of 2021. So now businesses can be eligible to receive the credit if they qualify on a quarterly basis through the end of this year. And really, it's designed to help small business keep their staff employed and on payroll during the pandemic. So even last year, and we'll get into the details of that, of who is eligible, we can amend tax returns back to 2020 and on a go-forward basis in 2021 to receive these credits after the calculation, the amounts have been determined. So essentially,
Stephen,
yep.
Just to add, and it's all not only to retain employees, but also to actually add employees and grow your business as well.
That's correct. So it doesn't matter how many employees you have, it's all based on your revenue. And if your revenue had dropped at a certain level, which we'll get to here in a sec, then it will, you'd qualify no matter how many employees you have. All right, so essentially the IRS, once you qualify, the returns are amended and the credits issued back, they are issuing a refund on those taxes that you paid. And if it's over the amount of taxes that you paid, they're going to issue you a check back to your business that you can then deposit and improve your bottom line. So in 2020, the rule was they would pay back 50% of wages up to $10,000 per employee for the whole year. So if you had an employee that you paid over $10,000, you qualified, they would issue you a wage refund of $5,000 per employee. Well, through the new act and the new laws that extended it into 2021, now this is per quarter, and it's 70% of wages up to $10,000. So now you can qualify on a quarterly basis and potentially get a $7,000 wage refund per quarter, or essentially $28,000 for the whole year if you qualify all year per employee.
But again, this is the just Stephen, just to jump in, this would be the max, because you have to look at, I'm jumping ahead, I think your next slide, but because you have, that's the maximum credit that you can get. You have to look at your PPP money as well.
Exactly. So there's no double dipping, right?
No double dipping, yes.
We're going to look at the PPP covered period. We're going to exclude those wages from being paid using the PPP funds, but you can maximize your benefit if you qualify up to 10,000 wages to be 7%. Or on the flip side, let's say you only paid someone 5,000 for the qualified covered period, then it would be a refund of 3,500, right? So it's based on the percentage.
Correct.
As I said, who's eligible? Again, if you've got the PPP funds, you're no longer excluded. But just as I mentioned, you must exclude the PPP covered period. And those businesses, not only was it due to a reduction in gross receipts, but it was those who experienced a full or partial government ordered shutdown could potentially make you eligible and able to qualify for the wage refunds. All right, so the nutshell of the program is based off gross receipts. If you had a 50% reduction in 2020 versus the same quarter in 2019, you could potentially qualify. In 2021, they expanded it to more businesses. So if you only show a 20% reduction in gross receipts the same quarter of 2019, then you can potentially qualify. All right, and then also new businesses. So this is neat. A lot of new businesses don't know about this, and I learned about this from Kevin actually, and working with him. The startup recovery provision. So even if you didn't exist in 2019, you use the corresponding quarter in 2020. But if you were a new business that started after February 15th of last year, and you had revenues less than $1 million, you may be eligible for the ERC in Q3 and Q4 of this year with a cap of 50,000. So that's pretty cool, because a lot of people think the business that started prior to the pandemic would only be the ones who qualify. But there's now a new startup recovery provision that allows those other businesses who started their business after and had and potentially eligible can qualify for the ERC. Is there anything you want to add on that, Kevin?
Yeah, so what I would say is we have, I can think off the top of my head, one client that we're working with that's really utilizing the startup recovery provision. What they're doing is he's hiring 7 employees because he gets $7,000 per employee per quarter. So 7 times 7 is $49,000. The cap is $50,000. He's using that money to fund his startup business because he can get $50,000 or $49,000 for the third quarter and $49,000 for the fourth quarter. So very interesting strategy. There's a restaurant opening up across the street from our office. So we're going to talk to them as, hey, you can utilize this to help fund your business in the third and fourth quarter. So very interesting strategy.
Yeah, absolutely. I mean, it's more than just getting a wage refund or a check back from the IRS. I mean, utilizing those funds to grow your business and essentially take advantage of the fact that you can pay 30% of your employee's salary while the IRS sends you 70%, could really help a lot of new businesses get going.
Exactly.
All right, so we'll just give a quick example of numbers. Let's just say we're going to use a perfect scenario where they qualify for the reduction in 2021. They're maximizing the credit. They get everything back. There was no PPP funds in last year or anything like that. So let's say you're a dental office, you have 10 employees. You show a 20% reduction in revenue for each quarter in 2021 when compared to the same quarter in 2019, and you're paying each employee $10,000 per quarter in salary. The maximum benefit this employer could get would be a $7,000 wage refund per quarter, or $28,000 for the year. Multiply that by 10 employees. That's $280,000 back into their business to help them ride out the storm that they experienced last year due to the pandemic. So they would file the ERC amount that's calculated with their federal form 941, which is your quarterly payroll tax return. And then there's form 7200, that is the accelerated refund request to the IRS. So instead of waiting for them to reconcile everything, which who knows how long that could be, we can file the accelerated refund form so they can send a check back to you much, much quicker. So hopefully those numbers and just a quick overview gave a little bit more better insight into how the program works and the potential huge benefit to put tens of thousands of dollars back into your business. So I'll open it up, Thomas, for questions, unless there's anything else you want to add, Kevin, before we jump into that.
No, that was good, Stephen. You learn well.
That's right. Well, I am a quick study. I mean, we have to be. I mean, all of last year, I think being a payroll and HR company, and similar to yourself, Kevin, being in the tax credit world and accounting, we had to, right? I mean, we had to know this stuff for our small business clients, and the ERC is just another one of those programs that we needed to pick up.
Exactly.
All right, so we got some questions coming in, and if you haven't asked questions yet, Q&A box on the bottom, drop them in. No shame, just get as much information as you can out of these guys today, if you'd like to. First question coming in is someone asking, if I filed an extension on my taxes, do I still qualify for this when I do file?
So great question. So, and by the way, I'm a CPA, so I guess and I'm from Tucson, so don't hold either of those against me, right? But anyways, because I'm sure most of the people on the call are from Phoenix. But anyways, so the ERC is technically a payroll tax credit. It's not an income tax credit, it's a payroll tax credit. So it doesn't have anything to do with filing an extension. So the other thing that I wanted to mention too, Stephen mentioned that we have a period of time to qualify or to apply. The IRS they extended the statute of limitations. You have up to 5 years to file for these payroll tax credits.
Great information. Next question is, to clarify, for 2020, you are not eligible if you received PPP?
No, it's the other way around. So what changed on December 27th is what Stephen alluded to, the second CARES Act that was passed on December 27th of last year. Now it opens up the floodgates. So people who did get, whether it was PPP1 or PPP2, you can also qualify for ERC. And again, there's 3 provisions of the ERC. There's the 2020 provision, there's the first and second quarter of 2021 provision, and there's the third and fourth quarter of 2021. So even though we're in May, right? We're in May right now. I can't wait for the end of tax season. It's going to be next Monday. But so there's still time. There's up to 5 years, but there's still ways and strategies that can be implemented today because we're still only in the second quarter. We still have second and third and fourth quarter to go this year.
Great. Next question, what forms do you file for 2020 wages?
So first of all, foremost, analysis has to be done, and that's what we do. We provide actually the service that we provide, it's a free analysis. So whether a client or a company qualifies or not, there's no fee, there's no cost, there's no obligation. So and again, Stephen mentioned it. It's a 941X. It's an amended 941 return. And then in order to get the refund faster, as Stephen mentioned it as well, it's the Form 7200. So first and foremost, do you qualify? And again, there's many ways that a business can qualify, but not all businesses qualify. So the full or partial shutdown, there's the 2020 provision, there's the 2021 provision. So there's just so many ways to be able to qualify under this tax credit.
Gotcha. So that is one, a couple of questions into one is, who should a business contact to help them with this? Is it their payroll company? Is it a CPA firm like yourself, Kevin, or who do they contact? And then somebody else is asking, how much would your services be to work with them on this?
So I just answered that about how much. So again, our service is free. Free, but what we charge is we charge a percentage. We charge a success fee. If we're able to get a refund, then we charge a percentage of that. So Stephen, I'll try to answer this. What we're finding is most payroll companies are not dealing with this because it's both payroll and accounting at the same time. So Stephen, that's why we're working with Journey, because Journey realized that they didn't have the expertise. I have a team of CPAs working on this, and obviously, Journey doesn't have any CPAs on staff.
Yeah, exactly. So it is a payroll tax return. So you could start with your payroll company, but what we found as for our business, in order to maximize the benefit for our clients and get this out to as many of our clients as possible, we partnered with experts in this tax credit field. So once the eligibility is determined, then we can, the 941X that Kevin alluded to as the amended tax return will be able to be filed. So that way that refund can be applied back to your business.
Great.
So, and then, yeah, you feel free to reach out to your CPA firm as well. We're finding that a lot of small CPA firms are not even equipped to handle this as well. So we've actually partnered with a number of CPA firms to be able to provide these services to the firm's clients.
Great. So I think the answer to that is, start with your own CPA, see what the situation is. Kevin's a resource for you if you don't have somebody in your network already, right? So next question we've got coming in: if I had employees file for unemployment in March and I hired them back in June and July, can I still apply?
Yes, exactly. It's a great question. Yes, it's just based on what your total wages are for a particular period of time. So yes, most certainly.
Great. And then another question for 2020, I heard that health costs from an employer sponsored health plan can somehow be claimed in this credit as well. Is this true?
I need to defer to my expert. Hold on. She's actually behind me. Healthcare costs for ERC, are they?
They're small business data.
Small business defined as? Oh. So yes, Jennifer, my right hand CFO, she's also a CPA. So I didn't know the answer to that question, but she said yes, as long as for 2020 you had under 500 employees and for 2021 under 100 employees, yes, those costs are applicable as well.
Okay, awesome. So we also just had some other questions here. Let's see here. Here's another one come in. Let's see. What's the estimated turn time on the retention checks once the 941 has been submitted?
So the two most asked questions are, how much money am I getting back, right? Because our answer is, it's a running joke in the office. It depends, because it just depends on what your wages are and how you paid them. And did you get PPP money? Did you not get PPP money? So what's interesting is the way that you file these tax returns with the IRS is they get faxed in, which is absolutely, they cannot be filed electronically. And then the IRS physically issues a check. So we're guessing at this point, 60 days, 60 to 90 days possibly. But obviously right now we're in the middle of tax season, so the IRS is a little overwhelmed. So it could take a little bit of time, but what we do with our clients is we get a power of attorney, and Stephen, obviously they have power of attorney with their clients as well. And that gives us the ability to contact the IRS directly on behalf of the client to check on the status of the refund check. So great question.
So I think bottom line is get started now, start looking into it as soon as possible.
Exactly. Well, and I do want to mention too, that the PPP program the SBA has partially shut down the PPP program. So you have until May 31st, which is only about 3 weeks, to be able to get PPP money. So you can no longer get PPP money from a traditional bank, only from a CDFI. So we have 4 CDFIs that we're working with. So for people who have not gotten the PPP loan, we'd be happy to help them with that as well. Or look up a CDFI. There's several in Phoenix and some in Tucson.
Great. Another question is there an impact or does anything affect it if you've received an SBA loan, EIDL loan, anything like that?
No, good question as well. So no, you can receive EIDL, either the EIDL grant or the EIDL loan has no bearing on the ERC, just the PPP money does.
Great. All good questions.
No, these are great questions. Yeah.
Hope these are helpful for everybody. We had some questions that we thought of beforehand too. Kevin, I might lob over to you. Can you start a new business now to qualify for the $100,000 credit?
See, now here's again the running joke in the office. It depends. So if the person starting the business does not have an existing other business, then the answer is a definitive yes. There's no issue. However, the way the ERC law is written is that if you're a member of a control group, which means the owner has multiple business entities that they operate or that they own, you have to look at the entire control group. So the answer on that would be, it depends. So possibly.
Okay. And then what type of documentation should businesses start gathering that'll need to be provided to the IRS? Proof of wages, payroll reports, anything they can start?
So great question too. The ERC program is very unique. Well, I mean, I guess all of this is unique. We have never had lived through a pandemic before, but it's not like the PPP loan where you have to provide documentation to the bank and ask for forgiveness. There's really no documentation that needs to be provided to the IRS, quite frankly. It's very strange. But what we do is we provide an audit-ready report that is available in the event that there is an SBA or an IRS audit, and we stand behind our work. We're the ones that are doing, we're the number crunchers and the bean counters. So I would say, obviously, keep any documentation that you have, Excel spreadsheets, payroll records that would support that credit that you're looking for.
Great. Another question is, do I count as an employee if I pay myself through a payroll company?
Another great question. So under the ERC, business owners and their family members are not eligible for ERC, but they are eligible under the PPP. And that's where it comes in. So the best, is to, because owners' wages are eligible under PPP, you can spend that money or allocate those wages to the PPP program. And then that frees up money that can be used for your staff for under the ERC program.
Great. Next is this only for the period we were closed down? For example, if we were closed down Q2 and Q3 of 2020, opened back up Q4, would we only be eligible for Q2 and Q3?
So another good question. So again, there's the full or partial shutdown provision is one way to qualify under the ERC. That's just one way. So if there was a full or partial government shutdown for your business or for your business industry, then yes, you would qualify under that provision. Additionally, if you had a reduction in cash receipts of 50% in 2020 or 20% in 2021, you could qualify under a different provision of the ERC. So you could potentially qualify both ways.
Does severance count towards qualified wages?
Oh, that's a good one. I believe it does. Jennifer, severance? It's only FMLA that doesn't qualify, but severance would. Our answer is we believe it does. I haven't had that question asked before, so that's a great. I believe it does, but see, part of the issue is the IRS has not issued guidance on even the 2021 provisions yet. The IRS did issue guidance on the 2020, and I have it right here. It's 108 pages on the 2020 provision, and it's severely lacking. There's a lot of unanswered questions. So this severance question, that's a great question. So I don't know. I would say most likely. I'm not aware that it's excluded under the ERC. Stephen, I'm guessing you don't know.
I don't know 100%, but I would say if it's a taxable wage, it's going into box one of their W-2.
It would.
Taxable wage, yeah.
Correct. Thing. That would be my guess. Yeah. Oh, these were excellent questions.
Yep.
Looks like we just had one more trickle through.
Okay.
Do you, Kevin, communicate with Stephen or any payroll company to get the numbers from payroll?
Oh yeah, absolutely. Yeah, so whether it's done in QuickBooks, whether it's done through Journey or any, ADP or Page. Sorry, Stephen, I mentioned ADP and Paychex. But yeah, whatever payroll service, obviously we need that wage information from the payroll service in order to do the calculation for the credit.
Yeah, so just to give you an idea of how the process would work, once they qualified, and what Kevin and his team do is they reach out to us, say, hey, okay, I need paycheck detail reports for this period for every check that you processed. And we're able to streamline that process for our clients and remove the middleman. The client doesn't have to go gather anything like that. Even for newer clients that we've transitioned off of other payroll companies, we're able to gather the previous year and current year payroll check dates. So in the event they qualify for ERC, let's say later down the road, we can still supply that information on behalf of the client.
One other thing that I could think to add is like, it's just huge dollar amounts. People just don't, it's just really astonishing that, you know, businesses don't know about it. It's just been poor communications by the media. I'm not quite sure what it is, but we have one client, they're probably going to qualify for the neighborhood of $400,000 to $500,000 in credits this year. And yet their PPP loan was $150,000. So this is bigger than the PPP. It's huge, huge dollar amounts.
It is.
Great. So we had, I guess, a couple other questions regarding more specifics towards services. I'm not going to ask those, but I am going to say that after this webinar today, we're going to send out the contact information for Kevin and Stephen. Should you have any additional questions or information about working with either of them, but or also like, you know, resources that might be available out there should you, you know, not know what you're doing or not know what to do. Again, this is us just bringing together some of our partners to help inform you about what may be available. So we'll send out email confirmation for both Kevin and Stephen. And if you'd like to get in touch with them, you're more than welcome to. Kevin, Stephen, thank you so much for your time today. Wanted to make this as succinct as we possibly could, but was incredibly helpful and informative. For those of you that watched today, if you want to go back and listen to this, we've recorded everything and we'll have this posted to our website in the next day and send it out. So really appreciate everybody today, and we'll send an email with a link to this video and everybody's contact information by tomorrow. So thanks so much and have a great day.
Great.
Thank you all. Thanks, Thomas.
Thank you.